Word Pig. I'm Ben Taylor, and today I want to talk a little bit about one of my favorite stocks and one of my favorite companies, Netflix. A couple of days ago, matter of fact, yesterday, the Netflix stock rose pretty substantially in one day, about 5%. Today it closed, it was a little flat today. Today it closed at about $102. And that's from a 52-week low of about 80. And I think its 52-week high was actually $133. But I want to talk about the stock in particular because the reason that most are saying the stock was up yesterday was because Netflix has been the subject of some acquisition rumors lately. And Netflix is often put back and forth, volleyed back and forth about being an acquisition candidate. But yesterday, I think, was one of the times where the candidate to acquire Netflix raised some eyebrows, and that it could, some people thought it was a very viable acquirer, and some people thought that it wasn't very viable at all. And the acquirer that most people are thinking would be most interested in Netflix is Disney. And again, in my research during the day, a lot of analysts were back and forth on whether this made sense or not. One analyst in particular, Mr. Sweeney at Bloomberg, and we'll go to a video by him. He doesn't seem to think that it's very likely that Disney would be interested in Netflix. So let me play that little piece for you.
This would be a good target.
Well, I think it's partially because I think some investors are concerned about the subscriber growth for this story. As we've talked about before, Netflix really is a subscriber growth momentum stock. It's really not an earnings momentum or revenue momentum. It's all about subscriber growth. And it looks like the subscriber growth is starting to slow, certainly in the U.S., where it's become a more mature market, but even in some of their international markets. And that's given investors some pause as they think about the long-term growth story of the company. And that's kind of, I think, just invited a little bit of speculation about would this company, as successful as it's been, as disruptive as it's been, might it be better with a larger company, whether it's a tech company or a media company?
Yeah, they've been trailing off that steep growth curve for the last couple of earnings reports, as I recall, in the quarters. But okay, if they were to be a target, and we're just looking at the possibilities now, who is rumored to be interested?
Well, the name that really came up really over the last couple of days, most notably, would be the Walt Disney Company.
Right. Of course.
Yeah,
Right.
They seem to be bandied about a lot these days. I think that would be highly unlikely for a couple of reasons. One, it would be a huge deal for anybody, but certainly for Disney. Right now, Netflix has a market cap of about $44 billion, so you'd have to pay a big premium on that. It's a very expensive stock, as we all know, trading about 90 times next year's earnings on consensus. So it would, likely be a dilutive deal for Disney, and that's something that Disney typically does not like to do. So, I think it's a low probability, again, in part because the story is still a good growth story. There still is a lot of support for the Netflix stock out there. And for anybody who would want to buy it, it would be a very expensive acquisition.
Yeah, and to go back.
I want to talk a little bit about, yes, Paul Sweeney. I just wanted to make sure I had his name right. Now, Paul sets up nicely a platform to talk about Netflix. And one, is Disney the likely candidate, or is Disney a viable candidate to acquire Netflix? And also, is the $44 billion valuation representative of fair value for Netflix currently? Is Netflix overvalued? Is it undervalued, or is it fair value? And I think it's just some of the numbers we have out there, we can get a good idea about Netflix. First off, let me fully disclose that I and my clients own shares of Netflix. As a matter of fact, Netflix is our largest holding in our all equity portfolio. I first bought into Netflix for my clients back in 2011 when it was under $8, and we've just ridden that wave until recently, and it's gone from a very small position in our portfolio to the largest position. And I often look at where Netflix sits to see if it makes sense for it to be the largest holding in our portfolio, if we should trim it back. So I'm always looking at Netflix in that sense. But first thing is, Netflix's valuation of $44 billion, is that a fair valuation? And I'm going to say, given the evidence that we have in the market right now, I'm going to say yes. You have to look at Netflix in comparison to similar companies. And the one that's out there that is most similar to Netflix is Hulu.com right now. HBO is another one, but I think Hulu is more telling. Hulu, like Netflix, is a streaming service. It's a subscriber service, and many of you know Hulu. I myself subscribe to both Hulu and Netflix and HBO. So you're probably familiar with what Hulu provides, but just for clarity purposes, Hulu definitely concentrates more on the TV content, stuff that you can get on the broadcast networks. You get, in most instances, the day after it airs live on your normal channel, and you can watch it on demand on Hulu. As far as its original content and its movies, they're much less of a player in those arenas. So it's really TV content that they're looking at. Now, Disney actually owns 30% of Hulu. And recently, Time Warner bought a 10% stake in Hulu at $583 million in cash. So that puts Hulu's valuation at about $6 billion. Now, when we look at how many subscribers Hulu has about 12 million subscribers. Well, if we compare that to Netflix's subscriber base of close to 90 million, and we apply the same value per subscriber, now, again, the inner workings of Hulu versus Netflix are a little different, but just as an exercise to see if the 44 billion makes sense, just multiply those 90 million subscribers by the 500 million, and you have about $45 million. $45 billion. So in my book, it seems to be fairly valued. Now, one further thing you can look at it is, are Netflix and Hulu similar companies in terms of, should they be valued the same? Should they both be valued at $500 per subscriber, assuming the $500 is a fair valuation? I'm going to say Netflix should get a premium to the 500. And here's why. Netflix has a much more extensive original programming content. It's international. It has content that is suited to its subscriber base. In Korea, you have Korean properties. In Latin America, you have Latin American properties. In America, of course, you have American properties. Its catalog is much more extensive. It also gets a lot of the TV programming, although it gets it after Hulu, it's still there. I'm going to say that although there's some value in being able to on demand stream your content from TV, I think, people to get it just the day after, I'm not sure that there's a lot of value there, although there seems to be some. Hey, like I said, I subscribe to Hulu, and I like looking at, Bob's Burgers on a Wednesday instead of a Sunday. But is that much more valuable to me than, let's say, getting Bob's Burgers 6 months later on Netflix, when I also have all of the original content Netflix has and the extensive movie library? So again, I do think that Netflix is at least worth, on a subscriber level, what Hulu is, and I would say it even should get a premium. So that 44 billion, I'm going to say is a pretty fair price. The other thing is Disney a likely acquirer? Well, I would say, again, yes, they already own 30% of Hulu. They're definitely looking to expand their sports content through ESPN, through live streaming. And then the other thing to look at is the deal that Disney inked with Netflix back in 2012. Basically, Netflix has the exclusive rights to all of the Disney properties, including Lucasfilm, so the Star Wars movies, Pixar, all of the Pixar catalog, all of Marvel, and that started last month in September. So it seems to me that although Netflix paid a pretty hefty price for those properties, that to get those things before any of its competition can get its hands on it is very valuable. Also, on the Disney end of it, they're looking at how those properties perform on Netflix. It seems to me that maybe they were testing the waters a little bit. Now, that's pure speculation. But again, I disagree with Mr. Sweeney in that I do feel that the $44 billion, although it's pricey, and it's certainly pricey on an earnings level, but what you're not considering is that Netflix has done so much expansion internationally. Those international businesses just aren't profitable yet. So the $90 PE on forward earnings, it's kind of misleading. Those international properties there's nothing to say that they won't be profitable at some point. So the valuation on a subscriber level, I think, is much more telling in Netflix's case. And also that Disney seems to be as likely a candidate as anyone. So that's just my take on it. As always, any stock that I talk about, I or my clients may own. You should definitely do your own research. Do not take anything I say here as a buy or sell recommendation. But if you do have any questions, feel free to contact me on any of the social media platforms. They'll be linked in the description section. I'm at The Third Pig on Twitter, and I'm at thethirdpig.show on Instagram. Until next time, this is Ben Taylor, and I'm out.